In the metals quadrant, taking a look at an outside range day in the March copper futures. Copper futures made a lower low than yesterday and then rallied up, creating an outside range day, which could often be a reversal pattern, especially following 3 consecutive sessions in the opposite direction. Copper jumped to a 5.5-month high on February 14th, then fell over 5.6% to mark 3 consecutive sessions lower. Then today, we made a lower low versus yesterday and rallied to a higher high than yesterday with a higher close. Now, this does not guarantee a reversal, but it's the highest probability outside range regarding the pattern's strength. The low today, 4 spot 54.60, that was down 0.36% or a third of 1%. On the upside, 4 spot 63.70, that was up 1.63%. And as we close out the day, we're still up around 0.9%. The Philly Fed Manufacturing Index was much lower than last month, pressuring industrial metals. The manufacturing index came out at 18.1, which was mildly lower than expectations of 19.4, but much lower than the January figure of 44.3. On top of that, the employment component came in at 5.3, which was less than half of last month's reading at 11.9. Now, this is a volatile series, but it's still early on pressured industrial metals like copper. And then we also had an interview on Bloomberg with newly confirmed Treasury Secretary Bessent, who reassured markets of issuance plans by saying that increasing the duration of issuance is a long way off is the part of that. That's the quote. In other words, the short end of the yield curve will have plenty of supply, and the long end of the Treasury yield curve, meaning 10 years and out, will not be pressured by an increase in that section of the curve. That should work out as slightly stimulative for the economy, especially home construction, which is good for industrial metals. Hence, it's probably part of the reason that copper rallied up late.